Hello everyone, welcome to the topic hotel accounting. Hotel accounting, as the name denotes, it talks about what? It talks about how the accounting we have learned till now, how the basics of accounting we have learned till now is applied in hotels. So we can read here, hotel accounting is a specialized branch of accounting that focuses on the unique financial transaction and operation of hotels. So it is the same as accounting. You will find the income and expense statement here that is much similar to the profit and loss account you have learned, and you will see the balance sheet also. But the basic structure of balance sheet and profit and loss account is tailored. It is edited and remade to something else so that it's suited to the repeating need of hotel accounts. That is what the accounts of every hotel in this world will have something in common, right? Some sort of expenses, some sort of income, some flow of cash will be same in every hotel in the world. So taking that into consideration, we have a separate type of accounting. So hotel accounting is same as the accounting we have learned, but it is a separate branch where we have customized form of procedure which suits the purpose of the hotel. Now it involves recording, classifying, summarizing and analyzing financial data to provide insight to the hotel's financial health and performance. Hotel accounting different from general accounting due to the specific revenue stream expense. Yeah, that's the main point. There are something specific none of the other type of business in the world will have. There are something like rooms, F&B that hotels will alone have. So there is a practice called hotel accounting that suits the needs of hotels while preparing financial data. Now we can see what are the advantages of hotel accounting. It improves the financial decision making since it is tailored to the needs of hotels. The hotel managers can easily make decisions with the help of it. It enhances profitability. It helps risk management, compliance with the regulations. All these things are very common to any kind of accounting. So I'm just keeping it. I can just read investors relation. It improves the relation with the investor. It acts as a method, a means, an intermediate to evaluate the performance. It controls the cost. It helps in budgeting and forecasting. If we have proper data accounted from the past, it helps us in making future predictions and budgeting. It helps in tax planning. It improves investors' confidence. The potential investors who are looking to invest in your hotels, they will ask for financial statements. So if we have a proper financial statement, that will improve the confidence they have to invest in your hotel. Now at the same time, this special system of hotel accounting have some limitations. The one thing is it is complex. Yeah, for a person who don't know what are the operations happening in a hotel, they won't even understand what's written there. Integration issue, since a hotel have so many different softwares used, they won't easily comply with what the accounting needs. Data accuracy issue, there is a high cost is there. Customization problems are there. Similarly, there are many limitations. They are just meant for the sake of exam. I'm not repeating it. From the basic idea of hotel accounting, we are moving to the idea of financial statements and the unified or uniform system of hotel accounting. What is uniform system of hotel accounting? Like we there are common principles that guide accounting all over the world. The practice of hotel accounting is judged. It is meant under a uniform system. Okay, uniform system of hotel accounts. This uniform system helps us to bring unity among the income statement and balance sheet prepared all over the world. So what we can do, we can easily compare the financial performance of one hotel with the other hotel. So because the income statement looks similar, the items look similar, the practice also has some similarities. Now let's see, according to US, it's a mistake. It is uniform system of hotel accounts, USOHA. Okay, spelling mistakes there, don't worry. Now we can see how an income statement is prepared under this uniform system of hotel accounts. According to this uniform system of hotel accounts, there are three things to be prepared. Okay, financial statement here means there are three things. Basically, let me tell you with them three. The very first thing is schedules. Schedules are small income statement, a small portion of the income statement that speaks particularly about a department, an operating department. I specifically an operating department department that has its own income and expense. So schedules are departmental income statement. They provide income and expense and the profit or loss made from a specific operating department. What is operating department? Any department that has its own income and expense is called operating department. So the very first thing you have to do in hotel accounting is to find the operating departments, that is departments that generate its own revenue and it has its own expenses. Such departments have to be found out, and for each department we will individually prepare an income statement, a small one. It is called schedules. After that we can prepare what? Income statement. Here schedule was a income statement for particular department, where this income statement is for the whole hotel. That means it compiled the data collected from different schedules. We have told there are different departments in a hotel that generate revenue. You will compile information from each schedule and prepare an individual standalone income statement for the hotel. Here also one thing we have to remember, income statement can be prepared in two ways. Don't worry, we are going to see the practical version. I'm just introducing this to you. We are told we will prepare income statement for the whole hotel. There also we have two methods. One is of course under the uniform system of hotel accounting, but the other one is departmental accounting. It's another approach. We will discuss everything and just introducing, don't worry. So as we have told, before going into the income statement, let's see what is departmental schedule. A departmental schedule is a detailed breakdown of the revenue and expense for a specific department within a hotel. It provides a more granular view of the department's financial performance and helps identify areas for improvement. So departmental schedule is a part of the income statement. It is a miniature form of income statement that speaks about the income earning department, any specific income earning department of the hotel. Like here are some examples. Here, rooms department, it has its own income and its own expenses, isn't it? So rooms department will have a individual schedule. Okay. Similarly, we have what? Food and beverage department, the very common one. Food and beverage department, as you all know very well, will have its own income and its own expenses. So it is an operating department, and since it is an operating department, it will have its own schedule. Spa department, that is not very common for every hotel, but if there is a spa department inside the hotel, it will have its own income and its own expenses. So it is also a operating department. Now let's see what is the general format of preparing a schedule. I'm telling you once again, schedule is the income statement, the small part of the whole income statement prepared specifically for a department. Here we are given with an example of room schedule. That means what? It is the income statement of rooms. It shows the revenue generated through rooms, from rooms. After that, what all the expenses are met. By deducting the expenses from the income, we will get whether the rooms department has made income or loss. Here we can see, first of all, they have written revenue. What do you mean by revenue? Revenue is what all they got in the cash inflow for the rooms department. See, here are just examples of inflow, the cash inflow that a rooms department, or the revenue that a rooms department can generate. Number one is transient, regular, then transient group. What do we mean by transient? That is temporary people who take rooms in our hotel. Then permanent means what? There are permanent residents in our hotel, isn't it? So they are just classifying the revenue as revenue made from temporary people and revenue made from people occupying our hotel rooms permanently. Also, if there is any other income, any other unspecified income generated from rooms, that is also taken into consideration. Together, when we take the sum of these three, what will we get? We will get the total revenue we have earned. So the first process is to list down the revenue we earned through rooms, and we will take the total. Now, directly after after finding the total revenue, we will deduct the allowances. Here remember, allowances means amount that the management, the top management have spent for the rooms. It is like an advance that is given to the rooms before it generates income. Before generating income also there are expenses to be met, isn't it? So the top management will provide some advance to the department. That advance is known as allowances. So soon after finding the total revenue, remember we are talking about room schedule, but for every schedule the process is same. First of all we will list all the revenues, we will take the total. If any allowance was given for the department, that allowance have to be deducted first. After that we will get, we can't call it net revenue, it is gross revenue. From that we have to deduct all expenses related to the department. Remember that point, it is expenses related to the department. If you find an expense in the list, but if it is not related to the specific department whose schedule you are preparing, you can't take that into consideration. Don't worry, we will see while we are doing the question. So you can either take this process or you can do it in another way. Either you can take the sum of expenses and take the difference, sum of income minus sum of expense, or you can directly deduct it from where, from this total. So you find the gross revenue. From this amount, what you can do, you can deduct all the expenses to find whether the department individually has made a profit or loss. Okay, now we have seen how to prepare a schedule. How to prepare a schedule, that means the income statement talks about a specific department alone. After that we will have this is the statement of income for the whole hotel. That means it comprises the information from the whole department, every department. You can, if even after do it after making schedule, if you have number for schedules, you can write your numbers here. Now let's see, it is little bit complicated but still interesting. We can see how to prepare it. First we will write down each department. Okay, we will write down the revenue generated, cost of sales, payroll and related expense, other expense of each department. Take this as A, the revenue generated as A. This is B, this is C, this is D. Then how will you find the income? A minus B minus C minus D. Don't worry, you will feel it complicated right now, but we will solve this later, don't worry. So we will write down like this. So after that what we should do, so we have written all our operating departments, the net revenue generated from there, then the cost of sale, the payroll and related expenses, other expenses. We have found our income. Here we have our gross income, the total of income after considering all operating department. After taking all operating department, there are some undistributed expenses like what, transportation, marketing, data processing, like that. Some expenses would be there. Now what should we do? We should take the sum of all those expenses. Okay, here we have got our gross income. Here we are taking the sum of all other expenses. We will just think the gross income was A, the sum of all other expenses was B and C. Then we have to find the income here once again, the net income after deducting all possible expenses, that is A minus B minus C. Don't worry, we will see how to do it practically. I am just introducing that. From there we will have some sort of unusual thing that in accounting we will call it as extraordinary items, like gain or loss on the sale of property. On the net income we will adjust that, and after that, if we are sure we don't have anything more to be adjusted, we will deduct our income tax from that and we will get our net income. Okay, don't worry, I'm telling you, you won't understand these things right now, but we will see this as a practical mode in the next video, don't worry. Before moving out of this video, let's see one more thing, one more important thing, and departmental accounting. Departmental accounting is an approach in common accounting which can be adopted in hotels also, which will be very useful because hotel have different departments that generate income, isn't it? As we seen earlier, there is rooms department, there is a fund department. Instead of following this USOHA, that little bit complicated process, you can follow departmental accounting. That is universal, so that is a little bit better. But from the point of view of exam, you will be either asked to prepare as per USOHA or departmental accounting. That depends. Now let's see. Departmental accounting is a specialized accounting method that divides a business operation into distinct departments. It divides the whole process of the business into departments that are distinct and identified individually, which will have its own profit and loss statement, isn't it? This allows us to make it more granular, that means small and understandable. What are the objectives of department accounting? It helps in performance evaluation. It helps the performance evaluation of each department. We can understand which department performs well. If we make only the whole thing, if we make a whole income statement, we can't understand which department perform well. Sometimes F&B would be in profit, okay. The same times rooms department will be in bloody loss. The every profit that F&B department is making is sucked out by the rooms department. So what decision that they can make? They can reduce the rooms in their rooms in their hotel. So they can reduce the expenses here so that we can save the profit we made from F&B department. So to make such an evaluation separately for each department, we need what? We need departmental accounting. Also, we can understand how to control cost by specifically pointing out where we are making more unnecessary cost. If a department is not producing enough income, why should we spend more on that? It also helps in resource allocation, it helps in decision making, it motivates each department because they are individually tracked on their performance. Now, what are the advantages? The same thing, I think. It improves profitability, it enhances decision making, better resource allocation, increase. Okay, simple things. Just read it for your sake of exam. Now the important part, departmental income statement. How we can prepare a departmental income statement? It looks more easy and simple than what the uniform system of hotel accounts tells us. So the key components are, it focuses on the department revenue, expense and the net income or net loss, whatever it comes. Let's see the format. Here it is. First of all, it is same as the profit and loss account we prepare, okay. There will be credit side, there will be debit side. It begins with the trading account. It says about the direct expenses, that is operating expense, purchases, other direct expenses. It will talks about the sales and closing stock. You will get either gross profit or gross loss. After that, we will deduct all other expenses, indirect expenses, and we will also consider our indirect income. The final answer would be either net profit or net loss. I know I am going very fast because I just want to skip this area after telling one important concept. We will do it in practical session, don't worry. Now that important area, very important, you should note it down because even for your exam point of view and as well as preparing departmental account, you need to know what is that topic, that is cost allocation and cost apportion. What is the difference between cost allocation and cost apportion? Cost allocation happens here. See, here we are writing an opening stock. Okay, we are writing opening stock. This amount, if there was an amount, it would be the opening stock of department A. Okay. The amount written here is opening stock of department B. Here we will write the total opening stock. Remember, here we are allocating the total opening stock to both departments, isn't it? We know what part of the total opening stock was used by department A, what part of the opening stock was used by department B. We have a very good idea about that. Similarly, about what? Net purchases, other direct expenses or sales. Even sales we will record separately. No, think if it was rooms department and this is F&B department, we will have a separate record on what was the sales made by rooms department, what was the sales made by F&B department, even though we take the total at last. So here we are allocating this, isn't it? When we talked about sales, we are allocating our cost here. Why we are selling it allocation? Allocation means we know the total cost. Often we make the payment of the cost together, but we know how much was used by these areas, these departments properly. So we are allocating the total cost to the departments. If departmental accounting was not used here, we may not have even think of allocating among the departments, isn't it? So since we are using departmental accounting, we are doing what? The total cost, whatever it may be, we are allocating it among the departments. This is called cost allocation. But come here, just take this expense. We are paying rent. We are not paying rent for rooms department or F&B alone. The rent is for the whole hotel. Okay, we are paying rent for the whole hotel. Now, to which department should we give this? No, we don't have a better answer. We don't have a common answer for that. It depends upon the decision of the business. Just think the business have decided to divide it equally among these department A and department B. Does that mean there is a rationality behind doing that? No. We don't know what was the portion of the rented building used by F&B and a room, or how to allocate it. We don't have an option to allocate it. So we will do what? We will take a common base. The base may be either to divide equally or to divide in the ratio of sales, how much sales each department did, or any other ratio like 40 to 30, 40 to 60 percentage, anything they can take. So when a particular expense doesn't belong to any of the department, any of the operating department in a hotel, what we will do? We will not allocate that cost, but we will find a common base to divide that cost, and we will apportion that cost to the department. So it is called cost apportion. Hope you got the difference between cost allocation and cost apportion. Cost allocation is done when we have a proper idea. When we have a proper idea, we know very well to which department the specific expense goes to. But cost apportion is done when we don't have, when the costs don't have a specific head to fall under. So here we have the cost allocation as the assigning of cost to different departments or the cost centers. Understand the revenue generating units. For an hotel, what is the revenue generating units? We have told about the departments, isn't it? So cost allocation means allocating directly to the departments based on its relation with the department, whereas cost apportion is where we divide the cost based on any other basis. See, we can take anything. We will take a predetermined ratio. Okay, it can be based on the ratio of sales, anything, things like see rent, utilities, salary of administrative staffs. If the salary of each department's staff is taken, we need an apportionate it. It can be allocated directly to the department, but administrative staff have a role in every department. So they contribute to the whole hotel as a together. So we can't just put them under a single revenue unit. So what should we do? We should apportionate the salary paid to them based on anything that the business can decide. When from the exam point of view, you will be given. Okay, we can see that. Don't worry, we will see how to do it. Now we have importance of cost allocation. Why? It makes the costing more accurate. It makes the costing accurate because it makes sure that only a department bears the cost related to it, or in a rational way. Also, it helps in performance evaluation. Yeah, of course, it makes decision making more easy. For some in some areas, okay, cost accounting is important. This type of approach in costing is important because some laws enforces that. Okay, now there are also challenges. The very one most challenge is here, choosing the right allocation basis. So how can we divide the cost among the departments when the cost is not spent for any specific department, but that has impact on all departments. So they need a rational basis for the division. If we can't make the rational basis, our cost apportion goes wrong. Then subjectivity, complexity, just for the sake of the exam, just leave it. So this is the basic idea of uniform system of hotel accounting and departmental accounting. Hope it was clear, but still if you have a doubt, please let me know. Thank you all.